Hi, my name is Ara. This is Rosars Investments. I haven't made a video in a while, but I saw the stock chart of Beyond Meat and it's down to $82 a share. So a few months ago, I don't know exactly what month, but maybe 4, 5, 6 months ago, Beyond Meat hit $200 a share. And at that time, I had everyone asking me about Beyond Meat stock. What do you think? Why don't you own shares? Why aren't you buying shares in this company? And the simple answer was that this is a company that was not making money yet, and the value of the total company was ridiculous. The value of the total company compared to its sales, compared to its earnings, was ridiculous. So it made me think to make a video on the best way to make money investing, because when someone's a new investor, they inevitably ask me about cryptocurrency. They ask me about Beyond Meat. They ask me about buying weed stocks. They ask me about these super, super risky things that are like the hot topic of the year. So I want to go over some of the past mistakes that we as a group of investors have made. So the first one that comes to mind is back in 2000, every tech company was trading for ridiculous valuations. And, you know, if you were to buy a company that had any kind of good sounding tech name, you probably overpaid for it in the year 2000. And, you know, everybody wanted to invest in these companies because they were up 100, 200, 500% in the last year or two. So that's around when I started investing, and I learned my lesson real quick, that if you invest in stuff that's really expensive, you can lose a lot of money real quick right after. After that was oil companies. In 2008, gas was $4 a gallon, and all these oil companies were making loads of money. But then when oil prices dropped, when gas is $4.25 a gallon, that's just not sustainable for the economy long term. So they had to go down. Everyone started buying Toyota Priuses and stuff like that. And then the price of oil dropped, and you did not do good investing in oil companies. Then in 2011, I believe it was, silver spiked up to $49 an ounce from the $10 to $15 range, went up to $49. And I remember playing poker in Florida, and everybody was talking about silver that month. And gold spiked up to like $1,900 an ounce. And, now that prices are super expensive, silver's not supposed to be $49 an ounce. But now that it is $49 an ounce in 2011, everybody wants to buy silver. Everybody wants to buy gold. Specifically silver, because from a percentage point of view, silver was way, way up. So let's see, that was 2011. Let's see, last year, cryptocurrency. I got into Bitcoin. I heard about Bitcoin, and I passed on the investment when it was $90 a coin. And I eventually invested when it was $800 for a Bitcoin. I didn't buy much. I wish I bought a lot more. But the point is, I was telling people to buy Bitcoin when it was low, when it was boring, when it was relatively low, when it was boring. But the majority of people didn't ask me, oh, how do I open an account? How do I buy Bitcoin? Until it was in the $15,000 or $16,000 range per coin. And by this time, I told people you can open up an account and, invest a little bit, like 10 or 20 bucks. But, don't invest a lot, because right now I don't have any Bitcoin left. I sold it all. I sold all my Bitcoin. I sold all my Ethereum. Prices were ridiculous. And that's when everybody wanted to buy Bitcoin, Ethereum, Litecoin. And the excitement around it is ridiculous. So there's a common term in the investing world, FOMO, fear of missing out. So this is a common trend with Beyond Meat stock, meatless meat, meatless patties, or vegetable-based, whatever you call it. Cryptocurrency, silver, oil, tech stocks, weed stocks back last year or beginning of this year. There's always like one hot topic that everyone wants to talk about. And in general, you can make money if you're one of the first people that are investing in it. But once the price is already high, if you see a weed stock and it was 60 cents and now it's $5 and now you want to invest in it, well, you've missed the boat. You've missed the boat. You're the one overpaying. You're paying $5 for something that's worth $1 or $2. It's not worth $5. With Beyond Meat stock, the IPO was $25 a share. You couldn't even buy shares initially until it was up to $45 a share. And then within a few weeks, it was up to $200 a share. So now everybody's talking about it when it's $150 to $200 a share. But now that you've heard about it and the prices are super high, you've missed the boat. It's not going up to $1,000 a share. You're the one overpaying. If you're the one excited about the stock and telling me like how much it can go up to, you have to reflect and think you are the one overpaying. The best thing to invest in the world for 99.9% of people, according to Warren Buffett, is index funds. And I do believe him, and I do wish personally that I invested more of my money in index funds. So every time you make an investment, every time you say, hey, R, what do you think about investing in weed stocks? I'm going to think to myself, is this better for you than investing in index funds? And almost every time, I'm going to think to myself, no. Right now, you might be overpaying for this weed stock. You'd be better off investing in index funds. Right now, you might be overpaying for Beyond Meat stock. You might be better off investing in index funds. You might be overpaying for a bar of gold or a bar of silver. You might be better off investing in index funds. And almost 100% of the time, you are better off investing in index funds. If you're excited about a particular industry, then you're probably hearing the information late. Unless you are someone that actually works in the weed company and you actually get to see the customers and you invested before it's in the news all the time, before everyone's talking about weed companies. Unless that's the situation, then it's probably a bad idea to specifically invest in weed companies because you've probably missed the boat. The valuations are already super high. These companies are already valued in the billions of dollars. Same thing with Beyond Meat. Even now that the price has dropped to $82 a share, Burger King has the Impossible Burger. Dunkin' Donuts has Beyond Meat, sausage patties or something. Even that the price has dropped down to $82 a share, it's still a $5 billion company. And I heard that they have $90 million in sales for the quarter. So their profits are minuscule compared to the $90 million in sales. So a $5 billion company that's making, let's do a 4-quarter, maybe $400 million run rate. You're paying $5 billion right now, even if this reduced price of $82, $5 billion for a company that has $400 million in sales, and those sales obviously are not all profits. A very small portion of the sales would be profits. So you're still paying extremely high prices for expected future growth. So don't think you can buy it for $82 and it's going to go right back up to $200. It might, but it might be overvalued and it might actually go down over time. So the best thing to invest in is index funds. And if you are one of the first people, if you're one of the people that actually works at Beyond Meat, you've heard about the IPO and you want to buy shares because you're one of the first people to invest in it, then that's probably a good thing. But if you're hearing about it after the fact, after you've already heard the news that Dunkin' Donuts is going to be using Beyond Meat, after you heard that Stop and Shop is going to be using Beyond Meat, it's probably too late. You're probably one of the last people to hear about it. So invest early, invest often, be consistent. Best advice is to always invest in index funds, no matter what you think, because we as investors are wrong a lot. And the best thing to do is to be conservative, be diverse, and give it lots and lots of time. And that's the most guaranteed way to become a millionaire that I know of. All right, thanks for watching. Thanks for listening. Give me a thumbs up and share the video. Bye.